All right, all right, all right. So it looks like we are live now inside of tax and cash flow hacks for online entrepreneurs. And let me just do a couple checks here. Yes, yes, yes. I see that we're live. So I want to wish everyone a belated Merry Christmas and Happy Holidays. It's TC Chambers, your admin here for tax and cash flow hacks for online entrepreneurs. That includes your MLMers, your yogis, your fitness coaches and fitness professionals, your home-based business owners, all of those that have the ability to access these phenomenal tax deductions. If you are not yet any of those, then I think today and going forward, we'll encourage you to be just that. If you're following along here today, give me a hashtag live or your hashtag relay, smash some hearts as we go along if you're finding value. If today's live, you find value in it and you think there's others that you know in your circle, in your family, your friends, your colleagues that can gain benefit from this, please feel free to share with them and tell them that they're more than welcome to become a member of our community here in Tax and Cash Flow Hacks for Online Entrepreneurs. But let them know, because there have been many people that I have not approved because they just haven't answered the three really simple questions. You know, are you an entrepreneur? What's a good email address for us to see some a digital product that I have for you for free? So just three simple questions. So anyway, every Wednesday night at 7 p.m., I'm going to be doing a live. We'll have some Q&A and things like that. And what's important to know is that yesterday, of course, I didn't do it because, of course, it was Christmas. Next week, I won't do it because, of course, it'll be New Year's Day. So next week, I'll also do it on Thursday. But after next week, it'll be Wednesday at 7 p.m. Okay, so now this live is about the W-4 and tax withholdings. So I'm going to do a live class on how to properly fill out the IRS form W-4. Why? It's because it's the key to helping you keep the right amount of dollars in your paycheck. See, many people actually believe that the IRS is taking money out of their paycheck, but that's absolutely incorrect. By how you fill out the W-4, you tell your employer to withhold a certain amount of money from your paycheck for federal taxes, and they then forward it to the IRS. So based on how you fill out this form is how much money the IRS receives from your paycheck. So we're going to make sure that you know how to do this properly. And I'll have this pinned at the top so you and anyone else can come watch it for a few days, and then it'll be a file. But definitely let anyone you know that will find value in this particular video that they can come find it here in our group. So the plan is I'm going to first go to one of the modules on my tax course and read some information to you so it'll set the tone for us actually filling it out. Then we'll go to the IRS's website and I'm going to walk you through it line by line, the personal allowance worksheet. It's only letters A through H. It's really simple. And most people are intimidated by all the letters and all that. We're going to dispel all that. We're going to get rid of all that so you see just how simple it is to maximize your take-home pay. And as I go over that one little document with you, you'll also see just how important it is to get those right dollars. Okay, so let's get this ball rolling. I'm going to go ahead and share my screen. Let's go here. Boom. So boom, you should be looking at my desktop now. And now what I want to do is I want to go to here. All right. So hopefully right now you're looking at the screen from my tax course. So, and this particular document here addresses tax withholding and the W-4. And it's about increasing your cash flow. And the way we go about doing that is adjusting the W-4. But I want to set the stage first, just to give you a little understanding of how important this form is, to give you some incentive, some motivation to fill it out correctly. And then once you see this training, you'll see just how simple it is to do that. So the W-4 is a very important document to our financial lives because it is the gatekeeper to cash flow in our paycheck. So the US Today and many other news publications have featured articles on the W-4 and employee tax withholding. Now, a major point of these articles is that millions of Americans are overpaying their taxes. The withholding is incorrect and are overpaying their taxes, having too much money withheld from their paychecks. Now, the articles make a point that it would be better for the employees to keep this extra money in their paycheck, and it would cause them to have more money stay in their paycheck, more money come home. And these dollars can be used for increasing how much you put your contributions to your 401k, 403b, or TSP. It can be used for paying down debt faster. It can be used for financing your business, for ad spend. And we'll talk a little more about it as well. Now, the IRS issued a bulletin in April 29th, 2005. They've entered one after that, but below I have that bulletin. So you see what they said even back in 2005. And they made the same point. And let's go down to it just to give you an idea of what they said. So the point that they made in this bulletin in 2005 is, first, they gave some refund facts. Federal tax refunds to individuals totaled more than $215 billion last year. They're talking about 2004. Well, guess what? In 2018, it was around the same, a couple $100 billion. Now, more than 101 million taxpayers got refunds. That means they're overpaid. That means that's 80% of the workforce. Well, guess what? Last year, 2018, over 100 million taxpayers got refunds. Again, 80% of the workforce. So 80% of the workforce, 100 million people, because they filled their W-4s out incorrectly, overpaid their federal income tax, and thus causes them to get a return. Now, look what the IRS says about the tax refund. Where does the refund come from? Is it magic money? Is it something that they just wanted you to have? No, it comes from your wallet or purse when you tell your employer how much to withhold from your paycheck, or you make an estimated tax payment. So they say for an average refund, this was back then when the average refund was about $2,126. It's over $3,100 now. It says refund, that's about $400 a week too much. And even back then, it says you may be using the extra withholdings as a forced savings method. But Uncle Sam doesn't pay interest on refunds except in certain situations. But the masses don't get interest, bottom line. So putting the money in any type of interest-bearing savings account or paying down debt might be a better option. So 2005, they put that out. Since then, they've also put another one out. So basically, they're saying that 80% of the population, 100 million Americans. Now, it's not an education issue, because you got to figure in 100 million Americans, there's Ivy Leaguers, there's University of Miami's, Tiffin University, community college folk, trade school folk, 100 million people. It's a knowledge issue specific to the W-4, all right? And when we first started working, whether it's 16-year-olds at a movie theater like myself or whatever your first job was, the HR assistant there didn't make sure that you understood exactly how. And it wasn't their responsibility, because your parents had jobs well before you got yours, and our parents didn't tell us, or your parents didn't tell you how important the W-4 was, so you didn't learn. And then we continue to follow a same mistake over and over. But let's talk about the importance of this form. Now, when employees have too much money withheld for taxes, they lose money because of something called ROI, return on investment. See, our money has value. Now, the banks, the insurance companies, guitar dealerships, they understand the value of our money, but most of us don't. So what happens is we can use our money to make money by investing. We can use our money by paying down debt earlier, which could potentially save us thousands of dollars in interest payments. Or as an entrepreneur, we can use our money to help finance the growth of our businesses. Now, let me share this example with you before we actually go to the form and actually do it. So far, if you're getting some value out of this and it's piquing your curiosity, smash some hearts, share it with some other folks that you know that are part of this group. Write down some people you think in your head that you want to send this to, or you want to make sure they come and join this community to get this information. But let's listen to this scenario. If someone received an extra $400 in their take-home pay and they added it to their debt payments, so let's say that's just $400 monthly, and they added to their debt payments, that would eliminate their debt faster. Again, potentially saving them thousands of dollars in interest payments over time. That could be debt on a credit card. That could be debt on a car payment. That could be on their actual mortgage. How about if they invested that $400 a month in their retirement account? That would save the money on taxes, because the money you put into your retirement account, that dollar for dollar lowers your taxable income that year. So those dollars you don't pay taxes on that year. So saves you money on taxes. But it also allows you to increase the contributions and grow your retirement savings even faster, to have compound interest possibly working for you even faster and harder, making your money outwork you by far. Or they could invest the money in their business, in marketing tools, software, ad spend, business cards, websites. They could grow their business and possibly get even a larger, a bigger ROI, return on investment of those dollars. Now, again, with cash flow being an essential, I said essential component of building wealth and building our empires, a smart financial strategy would be to keep as much of our hard-earned dollars in our paycheck as legally possible and use it to pay down debt or to buy, build, and grow income-producing assets, turning our cash into assets that bring us more cash. That would help us so much more into freeing up our time, getting our 40 to 50 hours back and getting free. All right? So now, let me stop sharing. I want to make sure I go through these steps properly to ensure that I'm always sharing the correct screen. So now what I'm going to do is I'm going to go to the IRS's website, and I'm going to go line by line and walk you through the IRS Form W-4. Now, I'm going to use this particular scenario as if I'm a teacher with 2 children, one of them in daycare. So as we get to the form, I'll go over those details for me, but I want you to have a piece of paper and jot down the answers as it applies to your life, as it applies to you. Okay, so let me go back to sharing my screen again. All right. And now I'm going to go here to the IRS's website. So see, I'm at irs.gov, and you should now see on my screen the IRS Form W-4. So right now, we're on page 1 of the IRS Form W-4, and this is the top portion of that page 1. Now I want you to notice the second paragraph here. It says purpose. This has always been there, but unfortunately, most of us never read it, nor are we encouraged to read it from our parents, from our colleagues, or assistants in HR. But it's our responsibility as the CEO of our finances in our household, and it's our money. But the IRS gives us guidance. The IRS says, complete Form W-4 so that your employer can withhold the correct federal income tax from your pay. So again, the IRS is not taking your money. You're telling your employer how much to withhold, and then you're forwarding it on to, they're forwarding on to the IRS. But they give you further guidance. They say you should consider completing a new Form W-4 each year, and when your personal or financial situation changes. You know, you might be like a teacher just starting out young, right out of college, no children, not married, single, and you would only supposed to have 2 allowances if you filled out the form correctly. But what happens when you go and get married? According to this, your personal financial situation just changed. You need to come back and refill it out, and your number will change. And then you'll have a child. Well, guess what? Your situation just changed. Personal, financial, you need to fill it out again. And then you'll buy a house, fill it out again. Then you get a rental property, fill it out again. Then you get another child, fill it out again. Start a business, fill it out again. That's why they say, because these things could be happening in multiple in 1 year. So they said you should fill it out each year, and when your personal financial situation changes. Now, most never knew that. So they've been teaching 15 years. They're married, they have 3 kids, a dog, a house, and they still have the same W-4 allowances that they had when they was a single teacher just starting. And they've lost all the buying and earning power of that money all those years, compounded. So we have to stop that. We have to correct that now. And then we have to share this knowledge with other people so they don't keep perpetuating that same mistake and losing wealth for generations to come. So now, the bottom of the second page has the actual withholdings allowance certificate. Now, I keep saying allowances because people make statements like, I carry 2 dependents. No, it's an allowance worksheet, an allowance certificate. And on this sheet here, now also I want you to notice at the top, it says, separate here and give the form to your employer, this form, the bottom portion, but you keep the worksheet for your records so you know how you came about this number. See, on this certificate here, you just put your name, your social security number, address, your filing status, single, married, or married, but with a higher single rate. All right. Then line 5 asks for your total number of allowances. And let me erase this because I filled it out before, so I'm going to erase that. Now, line 6 says additional amount if you want some additional withheld. Now, most don't want additional money withheld because, in fact, they're adjusted so they can maximize their take-home pay. All right. And then 7, enter exempt if you're exempt. So there are a certain category of people that are exempt from tax withholdings. If you are part of that category, special group of people, you already know it, then you put exempt. All right. So now let's continue on. Now, page 2, additional instructions. And then we get to page 3. Page 3, and let me go ahead and delete these. Page 3 is the personal allowance worksheet. I said personal allowance worksheet, not dependent worksheet, not exemption worksheet. It's a personal allowance worksheet. All right. So that's why in my course, one of the first things I cover in my tax course is terminology, vocabulary, definitions. See, once you understand the right definitions, you know what questions to ask, you know how to answer questions. So now, in this scenario, I'm going to complete this W-4, this personal allowance worksheet, with the following scenario for myself. But what I'm going to ask of you is on a piece of paper, write A through H, and I want you to complete this how it applies to your life and your personal situation. My scenario going forward here is that I'm a teacher, I'm single, I have 2 children, one 5-year-old, one 13-year-old. I make $65,000 a year, and my 5-year-old is in daycare. Okay, so now let's get at it. So according to the IRS, it asks us, line A, it says, enter 1 for yourself. All right, pretty simple, straightforward. There's nothing else to imply there, no between the lines. I earn 1 for me. All right, super simple. B, enter 1 if I file as married, filing joint. I do not, I'm single. 0. Line C, you see, don't ask nothing but do you file joint. Line C, enter 1 if I file as head of household. That's me, I'm head of household. I earn a 1. Now, I'm going to take the time to go back to page 1 to the instructions at the top. Now, the reason I'm doing this is because a lot of times, many people, they sometimes adjust the rules a little bit to better fit themselves. I've heard single people say, well, I always file head of household because I'm the head of my household. It's just me. I pay for everything. And then I've heard married couples talking, and the wife might say, well, honey, since I make more on my return, I'm going to file head of household. Okay, let's see what the instructions for line C say about that. So line C says, the head of household, please note, generally you may claim head of household filing status on your tax return only if you are unmarried. So the married person, you're out of there, forget that. And pay more than 50% of the cost of keeping up your the home for yourself, and a qualified individual. So single person living by yourself, you're out of there. So unmarried, more than 50% upkeep of the household for yourself and a qualified person. So usually a dependent, a child, maybe a younger brother or sister that you're the guardian of, or maybe someone that's a little older, elderly, that needs your assistance in taking care of them. All right, so let's come forward. So let's continue on. Bring this down a little bit. All right, let's go on to the worksheet. Come back to the worksheet. All right, so we just finished C, head of household. Now let's go on to line D. So line D, if any one of these 3 conditions apply, you enter 1. So if you are single or married filing separate and have 1 job, enter 1. Well, that's me. That may or may not be you. Now, if you notice, it didn't ask anything about a business, anything about a side hustle, anything how tall I am. Are you single or married, filing separate, and have one job? That's all they're asking you here for that particular qualification. Let's look at the next one. Or if that doesn't apply to you, if you're married, filing joint, have one job, and your spouse doesn't work. If those conditions apply, you get one. No reading in between the lines, no adding other stuff in there. Keep it super simple. If those two don't apply, the third and final criteria that you may possibly get a one here for, if your wages from a second job or your spouse's wages or the two wages combined is less than $1,500, you get one there. So if any of those three apply, not adding anything else in there, you get one allowance there. All right, let's move on. Line D. Now, let's note, if someone was single, no children, they would get one on line A. They would get one on line D, single, one job. Two allowances, that's all they would have. That's it. Nothing else applies to them if they're single, have no children. All right, so for those single people, you're carrying zero, you didn't read the form. That's all that means. Somebody gave you bad information and you just kept following that bad information. Going forward, you now know. You can now guide someone, direct someone to this, and I'll walk them through it for you, or you can just let them know and walk them through it yourself. Now, E, this, when it becomes very, very important, very crucial for parents with children under 17. So line E, child tax credit, refers to parents of children under 17. And it goes based on your income level and the number of qualified individuals you have, children under 17. So if your total income is less than $71,201, that's if you're single or married filing separate like me, because I only make $65,000 as a teacher, or if you married filing joint and your combined income is less than $103,351, then you get 4 allowances per child. So in my situation, I have a 5-year-old and a 13-year-old. In this scenario, on line E, I get 8, 4 allowance for each of my children. So if your income, if you're single or married filing separate and your income is less than $71,201, you get 4 allowance for each child that you have under 17. If your income, married filing joint, is your income is less than combined, less than $103,351, then you get 4 allowance to both. You get 4 allowances per child. Now, this is only going to go on one of your W-4s, not both. Just one of your W-4s get filled out this way, and ideally the one who makes the most. All right? Now, the second criteria, if you make more than the 71,201. So if you make more, if you make between 71,201 and 179K, is single or married filing separate. Or if you're married filing joint and your income is between 103K and 345K, then you get 2 allowances per child. Let's go on to a third criteria. If your total income is between 179K and 200K, if you're single or married filing separate, or 345K to 400K, if you're married filing joint, then you're going to get 1 allowance per child. Again, that's under 17. The last criteria is if you make more than $200,000, single, married filing separate, or between 345 and 400, you're married filing joint, or excuse me, greater than 400, you're married filing joint, you get 0. So in that line for me, I got 8 allowances. Now, line F, other dependents. So on line F, on other dependents, this is for your children that are 17 and over. So if your total income is less than 71,201 and you have children that are 17 and over, or it's greater than 103,351 married filing joint, or less than 103,351 you're married filing joint, you are going to get 1 allowance per eligible dependent. All right? What if you make more than that 71,201? So if your total income is between 71K and 179K, single, married filing joint, single, married filing separate, or between 103K and 345K married filing joint, you're going to get 1 allowance for every 2 dependents. So if you got 1 child that's over 17 and you fall within that, you get no allowances, 0. But if you have 2 children that fall between that, you'll get 1. If you have 3 children and your income is within that level, that criteria there, you get 1 allowance. But if you have 4 children, you're going to get 2. So I hope you understand that. So you take the number of children divided by 2, And that's how many allowances you're going to get. 1 or 2 or 4, based on that. Okay. And then, of course, if your total income is higher than 179K and you're single, married, filing separate, or it's greater than 345K if you're married, filing joint, you get 0. So for me, I get 0 on that line because I got all my allowances on line E. Other tax credits. So if you pay daycare, if you got an earned income credit when you file last year's taxes, a child income credit when you file last year's taxes, then you're going to get 1 more allowance here. All right. So my 5-year-old is still in daycare. Boom. Now, line H is simple. Add them all up. So for me, that's 3 plus the 8. That's 11 plus the 1 is 12. So I got 12 allowances. Now, in this scenario, we're not itemizing. In this scenario, we're not taking consideration any additional deductions, adjustment, or additional income. That's another worksheet. That's the deductions, adjustment, and additional income worksheet. We're not doing that in this video. I'll do another video maybe tomorrow or the day after. So now, once we have that number on line H, we go back to page 1. And that line, and that 12 goes right here on line 5. Again, additional amount that I want withheld from my check, 0. And I'm not exempt, so I won't do anything on that line. And I then sign with the understanding that everything here is true and correct to my knowledge. All right? That's just how simple it is. So I hope you all found some value in that. If you found some value in that, please give me some hearts. Smash some hearts for me. Again, if you're just joining, give me a hashtag live, or if you're watching the replay, hashtag replay. But if you found value in this so far, I'm almost done. If you found value in this so far, I want you to take mental notes of anyone you want to invite into our group so they can gain benefit of these type of videos. Okay, so now let me go back to stop sharing my screen. Now, what I'm going to do now real quick is I'm going to show you a before and after. One of my clients, we took a before, they made any of their adjustments, and then after they made their adjustments. So you get an idea exactly how it looks on the pay stub and the type of impact you can have when you do this correctly. Now, so let me go back to share my screen. Because I'm going to always make sure that I get the right thing up there. And we're going to do this. Bring this down. And bring this up. Should have another one here somewhere. I might have to go find it. Give me a second because I don't see it. Let's go in here, find it real quick. Let's go in here. Let's find it. Let's find it. Let's find it. My apologies for this little delay here. Get to see how messy my downloads folder is. Let's see here. Another thing is I'm going to move this over. No, that's not it. Let's see here. Here we go. It should be this one. Yes, that's what I want. Okay. So now you should be able to see both forms here. All right. So now on the left is the before. So before we did any adjustments to his W-4, before we filled it out correctly, now mind you, this includes both the personal allowance worksheet and the deductions, adjustments, and additional income worksheet. So he was able to get even more cash flow based on that second worksheet. So they were taking $504.28 every 2 weeks for federal income tax being withheld from his paycheck. Once we went in and we adjusted his W-4, going line by line like we just did, plus the second worksheet, what I'll do another video on, he got that down to $107.15. So they withheld only $107. So that's almost $400 a pay period. $200, $397 each pay. Almost $800 a month. Every single paycheck, every single month went back into his house. So $800 a month went back into his household. No overtime, no part-time job, just working how he worked before, but being smarter, positioning himself as an online entrepreneur, now giving him the ability to write things off that he was already spending money on. I'm going to do another live video, even on that. So many of you already have car and truck expenses. So did he. Now he starts writing them off partially. Cell phone, writing them off partially. Internet access, writing them off partially. Travel. See, when him and his children travel, they pay for it. Why? Because his children are now employees of his business. He hires his children to help him in his business. He uses their picture on their business cards, their picture on his websites. When they're doing posts, they're out and about. He pays them for using their likeness to help him market and grow his business, to help him clean the company car, to help keep his home office organized, to let him know when he has emails, messages on his Facebook. He has them search and Google images that he's going to use in posts. All those things he does. He pays them for that. So guess what? As a result of that, all those Christmas gifts that were under their tree this year, they paid for that with the wages that they earned. And he got a 100% deducted. Their clothes for that year, the special treats, their movies, when their dinner nights out, they pay for that themselves. Why? Because they earned wages for helping their dad in the business. He saved thousands of dollars as a result of that, doing what he was doing anyway. So more of that to come. So if you got any value, again, if you got any value, stop sharing my screen. If you found any value in what you heard in this particular live, smash me some hearts. Give me some hearts. I want you to let me know. #live. If you're watching this live right now on the 26th of December, or if you're watching the replay, I want to know that as well. And then again, if you found any value, tell your friends, your family, your friends, your colleagues that this is a community they can come and they can get some actionable steps to improve their finances. They can get some knowledge. They can get some tools. They can get some things that they can take action on right now to have a positive input on their cash flow. So I'm going to do a lot more of these. And again, every Wednesday at 7 p.m., I'm going to come live. We have Q&A, and I'll do some training and classes like this. Next week, Wednesday, we won't do it. There's New Year's Day, but the day after, Thursday, I'll do about 7 p.m. I'll come on and I'll do another class. And most likely it's going to be the deductions, adjustments, additional income worksheet. Okay, so I want to thank you all for taking time to watching this, and I hope you found some value in it. Someone invited you to take a look at this. Get back with them. Let them know that you want to be a part of our community here. But I'm pretty sure that if you're watching this, you're in the community and they've already invited you. So disregard that last thing. So Merry Christmas again. Happy holidays. And again, I hope you guys found some value in that. Thank you guys. Take care. And I'm out of here.